Hello, hello. Thank you to everybody that's joined already. This is a space that we're very, very excited for, but we're just a few minutes early. Um, we're planning to start on the hour, so in just 3 or 4 minutes. I can see that Kadena has already joined. I know that the Kadena account won't be the speaker for this event, but if you are available, maybe we could just do a quick sound test to check that everything's working okay. Okay, please bear with, guys. I'm just going to get in touch with the team.
Testing, testing.
Loud and clear. That's absolutely brilliant. So we'll just wait just a couple of minutes for Stuart to join and we'll get all the sound testing done there too. So thanks so much for bearing with us, everyone. Nearly there, everyone. Thanks so much for your patience. Just hopefully just a few seconds now. We're very, very nearly there, everyone. So thank you so much for your patience. Just a short while now. Fantastic, fantastic. I think we are ready to kick things off now. We've got both the Kadena account itself and also our very, very exciting special guest, who I won't introduce for just a moment. But Stuart, very quickly, do you want to do a quick sound test, check that everything's working okay? Can you hear me all right?
Mic check, mic check. Can you
Fantastic.
hear me?
Loud and clear.
Great.
Yeah, thank you everyone for waiting just while we got things set up. I'm sure you're all very, very familiar with just how Twitter, or rather X Spaces, can be. And actually, we've had very few technical difficulties over the last few weeks, which is surprising for the platform, that's for sure. But, for those of you that have joined us for the spaces, for the interviews that we've been running over the last few weeks, you'll know that we've had a massive range of projects on. We've had some focus on the BNB chain ecosystem. We've had some focus on Bitcoin. We've had everything from hardcore DeFi products all the way through to sort of up and coming meme coins, understanding that ecosystem. And today's interview is a little bit different and, in my opinion, a little bit more exciting for a few reasons. The first is the caliber of the guest that we have on. I'll let him introduce himself in a minute, but it really goes without saying that he is one of the brightest people in the space. And I'm lucky that I'm hosting, and I think everybody is very, very fortunate to be available and able to listen to him speak. But the second reason is really the project itself. And at BSCN, you probably know we do our best to cover everything in the space, anything that we think is exciting, valuable, impactful, and everything in between. But obviously, part of what we do is we look to identify exciting projects, or rather projects and ecosystems that are going to become even more exciting over the next few months. And, the sort of traditional way to do that is to look at which projects are launching soon, which projects have just done TGE or are doing it soon. But actually, another thing we do is we look at ecosystems that may well have been around for some time, who have been building for multiple times the lifespan of a lot of the projects that we speak about, and this is very much one of them. So without giving too much away, this was a project that we saw they were doing some very, very exciting stuff in 2025. So we decided to write some organic coverage, some deep dives, some insights. The team got in touch with us, and frankly, when we got talking, heard about the vision, heard about what's being worked on, the whole prospect just seemed all the more exciting to us. But I will allow our guest to introduce both himself and the project. We're talking today with Stuart Popejoy, who is not only one of the most successful founders in the space, but as I mentioned, one of the brightest minds. How are you doing today, Stuart?
I'm doing great. Yeah,
Well,
excited to be on BSCN.
Yeah, we're really, really excited to have you, and hopefully this is the start of quite an exciting long-term relationship. At least that's what we're hoping for sure. But before we dive into, I guess, some of the nitty-gritty, really impactful topics that we have today, I was wondering if maybe you could just give the audience, I suppose, an overview of both yourself, your background, but also Kadena's as well. So where it started, where the vision was, and really what the journey has been like between, I suppose, over the last sort of 7 to 8 years now, which is just incredible.
Sure. Yeah, so my name's Stuart Popejoy. I've been in technology since the 90s. I started at Apple Computer in the 90s. Came to New York, got into fintech, exchange backbones and trading systems. Ended up at JP Morgan, building doing a complete overhaul of their equity algo system that, was responsible for almost $1 billion a day of agency equity trades. Brand new system we built. But at a certain point, I wanted to do something new and got into the innovation group at JP Morgan. And quickly it became clear that blockchain, this is around 2014, that blockchain was going to, interestingly enough, enterprise, even though you had Jamie Dimon, talking smack about Bitcoin at the time.
For a long time, right? Yeah.
Yeah. And, very much then. Meanwhile, you had groups like ours all over, the kind of bankosphere, taking blockchain very seriously. And one of the things that was great about that was that as JP Morgan, it was easy to get people to talk to us. So we talked to everybody in blockchain at that time. Vitalik came in, all the people who would, kind of do private blockchain were there. The Cosmos team, everybody who was anybody in blockchain came in. And one of the things we quickly realized was that a lot of this stuff was not being designed for scale. It was being designed, Bitcoin, obviously incredible system, changed the world. But, if Bitcoin could scale, let's be honest, we wouldn't probably be talking about a lot of these other systems, because,
really good point. Yeah.
So Bitcoin's great, but it's not efficient. And then Ethereum comes along and it's far more flexible. Bitcoin, interestingly enough, could be more flexible. And indeed, we've seen kind of use cases added to Bitcoin over the years. But Ethereum really grabbed the smart contract, story and ran with it. But they also did not address scalability. And of course, we're still dealing with that today. So we launched to solve that. We launched to solve that initially in private blockchain, which was also kind of dogged by bad solutions that couldn't scale. But quickly we realized that the innovation was not happening in the private space, but was happening in public blockchain, and sought to launch a layer one blockchain. That again, we wanted to solve the scalability issue. We also wanted to solve the safety issue. Because another thing that was going on, and still goes on, although I think, smart contracts are kind of mastered better now. In the late 2010s, there was a hack every week, and millions were getting stolen. Well, and, this still happens, of course, but it was, happening all the time. So we designed a blockchain algorithm based off of some early Bitcoin research, and also using some of the stuff in that we had developed in our custom smart contract layer, Pact, to design a scalable proof of work layer one blockchain, that gave the scale that is needed for crypto to really come into the mainstream without sacrificing decentralization. And not only were we standing on the shoulders of, certain giants, namely Satoshi, but also Adam Back and some of the people who had worked on the original beta coin and the original designs that would eventually be changed to make Litecoin. That was what we grabbed the original design, which was using SPV to scale a network to multiple chains. And we started working with Stuart Haber, Dr. Stuart Haber, who ended up authoring the original Chainweb paper with us, Stuart Haber being the most cited author in the original Satoshi Bitcoin paper and the inventor of key aspects of blockchain in the 90s. So just legendary dude, came through and really loves Pact too. So that's what we launched with, and we're still the only, to this day, we're the only parallel chain architecture in public blockchain, and we're also the only, and we're the only scalable proof of work architecture in blockchain as well. So that's kind of our background. And again, it's all trying to take things that we learned, me and my co-founder, Will Martino. His background was in fintech as well, but not only that, he worked at the SEC for a while. So, the recent announcement about proof of work, this is something we've been anticipating for a long time, because we knew that proof of work is the most decentralized and the one that could, that you can really believe in terms of something you can build on, in terms of avoiding regulatory concerns that might dog a proof of stake project that's insufficiently centralized. So, that's a lot. I'll stop there. There's more we can talk about, but that brings us up to almost the present.
No, I mean, goodness gracious, what an incredible introduction, right? Like, not just to sort of the team and the context behind it, but to the project itself, right? The idea of, I guess it almost feels sometimes like proof of work and scalability are almost like an oxymoron, right? And the way that you guys are tackling that, and the way that you guys are taking the superior decentralization of one concept and overlapping it with what is probably has been for the last 7 or 8 years the most important concept in cryptocurrency, and we're still feeling the impact of that today, I think is absolutely awesome. Some stuff I knew there. I think, you're very, very humble about your own background that I'm sort of familiar with as well. But it's perhaps no wonder with the caliber of the team and the origin story and the experience that was there, through that sort of JP Morgan lens. I think it's perhaps no coincidence that Kadena is positioned the way that it is, which is fantastic. So obviously, you're not the only project that was a response to a lack of scalability, even in that sort of smart contract heyday that Ethereum was having in the mid-teens, right? It was very much an issue. You guys do predate other sort of scalability focused projects, like if you think about Solana or Nia, those were later on, which I think is perhaps even cooler. But obviously, Ethereum scalability has been a massive issue for a very long time. I remember 2021 and having to pay like $150 worth of gas to buy some stupid ape NFT that's now worth like, 7 cents or whatever it is. I'm sure a lot of it's in there, right? Guilty as charged. But I think, and Ethereum has certainly come a long way. Like layer twos are, to put it very bluntly, a big deal in terms of what they allow. But of course, they still have issues as well, right? Centralization being an obvious one. And what we really want to talk about today, and in truth, the reason that we got excited about Kadena, however many weeks ago it was when we were really, getting into the weeds with it, is what you have planned with regards to Chainweb EVM, and would love to focus a little bit on that and what that's going to mean. But I was wondering if, just to sort of follow that conversation, make it a bit easier for both the audience, but also for me to understand, do you want to talk a little bit about why, some would say that the Ethereum layer 2 model is quote unquote broken, and thereby why the innovations that you're bringing in, right, Kadena that is, are going to solve that, basically?
Sure. Yeah, I think the problems with layer 2 have really become clear this year. Because a lot of there was basically, with the optimism group coming together and kind of use case success on Arbitrum, there was a lot of enthusiasm surrounding layer 2, and certainly a lot of really great work that got done. Really
a hell of a lot of VC funding, I would add as well.
Yes. Well, that's that. I don't know. Let's put it this way: it's people want to invest money in crypto. That's good. Like, I'm not always sure why,
Well,
but
I'm not complaining for sure, but money
yeah.
is like, yeah, 100%.
Yeah, and layer two, when you've got Vitalik leaning so hard in something like that, it's not really it's there's no wonder why people were really going hard at this, and and Vitalik really made a vision surrounding this that, and I think part of that came from a burst of confidence and optimism coming out of the merge. And, the fact that the merge went off so well, which has to be called out as one of the most amazing real-time upgrades ever performed in human history.
I
Like,
think at the time I didn't appreciate it quite so much. I
I
think,
mean, this never happens. You never upgrade a massive system and just nothing goes wrong. And, that's so, but, in fact, it was like a lesson for technologists, which it went so well that, yeah, a lot of people are just like bored. Uh, they should have had a few
yeah,
outages just to like make it look hard, right?
it would have been good for media companies like us, right, to have a few little
Right, right. There was no news. And it was priced in by that time too, so there was no bump. So, um, so it seemed like, okay, well, they were able to switch to proof of stake, which was a bugbear for them for years. They launched in 2014 saying they were going to go to proof of stake. So, they were proof of work for, until then. Um, so I think, but this year I think is when, it really started becoming clear that some of these things don't really have an end in sight. The fragmentation doesn't have really an end in sight. Things like Superchain are basically, they're aspirational only at this point. It's not clear when how they're going to make this kind of, super chain of L2s. Then, the centralization risks that have cropped up with sequencers and the fact that there's really no way to make a decentralized sequencer. Anytime you're in a situation with crypto, and by this I mean cryptography, where people are dependent on developing brand new secure protocols, you're in trouble because, even Ethereum, to do proof of stake, Ethereum, they did it in a pretty brilliant way. I mean, with the beacon chain, but like, it's still basically proof of stake as we've seen in Tezos or Cardano or anywhere else.
yeah.
So they were doing something that had been done before, not exactly, but at least the crypto had been done before. And now we're in a situation where, and then finally, the other thing is that the L2s themselves, basically copied the Ethereum model so that they're all individually not very scalable. So that while, so now we have problems with gas on layer twos. So you've got fragmentation, you've got risks around validator selection and roll-up governance. The finality is in, what is it, a week generally? It's really starting to look like a pretty, and
7-day period, right?
yeah. So, it was like the kind of thing I think people were willing to put up with it while the technology was new. And again, just the single UX, point of not having to pay an arm and a leg for gas. And in theory, even though it's not final, being able to, execute a little bit faster than you might on Ethereum, although not that much faster. That is what was really driving L2. So in 2025, we're not the only ones who are looking at this a little different, right? I mean, you have other projects like Say and Monad. You have, not only that, I think the big development was just Solana kind of crushing it in the execution space in terms of just launching apps that people wanted to use, getting transaction volume over onto Solana. They really kind of broke the monopoly, at least the monopoly story that like the entire world, all the TVL that we're ever going to see is always going to be anchored on Ethereum. We now are in a world where people are starting to see that it doesn't have to be on Ethereum. But the thing that took us a while to figure out, and indeed, part of the origin of where we started finally taking EVM seriously was, frankly, in working with institutions, because What has become clear is that EVM has emerged as a kind, there's a lot of standards on EVM, very important standards that, have been really important to accelerate crypto, starting with ERC-20 and everything that would follow. EVM itself has emerged as kind of a standard. And while EVM is an imperfect platform, and now people are, talking about other platforms like RISC-V, EVM is still the one that has the mind share of and has the developer community, and it's what people understand. They know how there's so much innovation that has happened in EVM. So in a way, the story isn't Ethereum, it's EVM. And that's where Kadena comes in, because once that became really clear to us, we realized that we have to become part of this story as well. We need to bring some of these benefits that users of Kadena have been enjoying. We launched in 2020. We have a scalable blockchain proof of work system that has been operating without a single pause in block production since 2020.
Yeah, which you can't say for basically any major L1 ecosystem at this point, and definitely not what we'd call like the big ones, right?
Right, at all. And, and not only that, a lot of the, speaking of Solana really cut some corners to get to what they have, which is, a system that has kind of better UX on the surface. And it does, because, for many reasons. I mean, one of the reasons is that they've been so aggressive in serving developers. And that's something, we're learning from Solana as we learn from other projects that have done things well. But they cut serious corners when it comes to decentralization, even when it comes to, the thing that we're dealing with some of these protocols is that there's more money to be made in hacking the protocols than in hacking the root consensus model. Like if you were to try to hack Ethereum or hack Solana, at a minimum, you'd need a ton of Sol or a ton of ETH. And, why? When you can go exploit some insecure protocol or some insecure bridge or some insecure L2.
Massive amounts of wealth in one place, be it a bridge or whatever.
Yeah. It's just easy money. So for instance, in Ethereum right now, an interesting thing about, something like Ethereum, but even Solana too, is that if there ever was a major slash, I don't really know what any of these ecosystems would do. Just think about Lido, right? Think how much money is tied up in Lido and how much Lido is predicated on the fact that you can always get ETH for your SDETH. Okay, great. Well, what happens if the ETH underlying that SDETH gets slashed because somebody actually decided to hack Ethereum? Nobody knows. So that's something that it makes doing financial engineering on a proof of work model like Kadena an entirely different situation, because there's no slashing.
That systemic foundational risk that comes with that consensus mechanism.
Yeah, and what's weird is that Ethereum now is even moving further in the direction of pre-confirmations. They're integrating it into the protocol increasingly. So they're just basically doubling down on this problem. They're saying we're never going to roll back. And that's basically just saying that, hey, there's enough money behind this that it's basically just trusting game theory, and that's not really what crypto is supposed to be about, right? That's not what Bitcoin's about, that's for sure. And that's not what we're about.
Very, very cool, and a hell of an introduction. And I guess to move on slightly from the problem itself, let's talk a little bit more about Chainweb EVM. And I know that that's going to be a discussion that probably sort of spins out, right? But I guess as someone that's completely new to the Kadena ecosystem and to the innovations that you guys have been working on and the innovations that you're planning to implement, how would you best describe the roadmap for the next few months? And obviously with Chainweb EVM being at the core of that.
Yeah, so the roadmap is really aggressive, actually. The testnet for Chainweb EVM is this summer. So we're really making incredible progress there. We started major engineering on this in November and rolled into ETH Denver with a fully operational dev kit that was running 2 EVMs under our consensus model. So today you can download a dev kit and you can start working with our cross-chain protocol to, innovate and develop use cases on EVM, on Chainweb today. And I encourage builders who are interested to, come check out our landing page for that. We'll throw some stuff up, for people to come check that stuff out. But the reason why I say this is not just to, not just to talk how quickly we're moving, although I think it's pretty remarkable. It's that, it shows that what we're doing is actually not a fundamental change to our architecture. Chainweb consensus is what powers the Kadena network today. And it is how we have 20 chains, each chain as powerful as an Ethereum or as a Bitcoin. We have 20 of them, all operating in a true parallel configuration where no chain is like a hub. It's not hub and spoke. It's not a DAG. It's a true parallel network of chains. And again, it's something, and it has the unique property that as we add more chains, which we will be doing to bring EVM chains on, we're bringing on 20 EVM chains. So we're doubling the size of our network. Chainweb has a unique property that the more chains you add, actually the stronger the network gets and the more efficient it gets, because you don't need, proof of work is unique in the sense that the security it delivers is infinitely divisible. So we can use the same unit of work to secure 20 chains, 40 chains, 100 chains, 1,000, 10,000 chains. There's actually no limit. And which is pretty amazing because that's not something that really happens in computer engineering a lot. But the point I'm trying to make is that this is not, this is not next gen sauce that we're rolling out. This is stuff we already have. Pact runs as an application layer on top of our 20 chains today. Tomorrow, we'll introduce 20 chains that have EVM running as the application layer. And what's great about that is that insofar as you're a EVM developer who's new to our ecosystem, deploying on our network is simple because you just pick a chain and you deploy to it, and you just, to get started, you just treat that one chain like Ethereum or like Polygon or like anything else, and you just deploy to that chain. All the tools work, Hard Hat, Foundry, whatever you're used to using, and you can deploy directly onto one of our chains. So that's a huge win in the sense that, it's going to be exactly what people are already used to. But the big win here is that scalability is not just a word. It translates into real benefits. The first benefit is that gas never gets out of control, and you always have something to do if you run into a situation where gas is making it hard for your users to use your product. In our network, you can always scale your application to more chains. And, so if you're hitting one chain too hard, great. Deploy to 5 more and spread your users out on those chains. We're really the only network that offers this. So gas is a huge, so the point being is that it's not that gas goes away forever. It's more that if you run into a situation where gas has a problem, there's a solution. And then from there, it just gets into all the great things that are actually happening with EVM, like that are coming out with Pectra for chain abstraction, for gas stations. And, we have a more advanced application layer in Pact. We have things like gas stations. We have things like inherent multisig. So people who have been builders working in Pact are used to working in a significantly more advanced and secure environment than EVM. But we're not EVM is making some exciting changes with Pectra that is going to bring gas stations, bring chain abstraction. And we're bringing our parallel cross-chain technology. And so I think it's a really exciting offering for EVM. It just makes it, especially with all the things we see happening with Move and some of the other technologies that are out there, I think it's a really exciting time for EVM technology, and Kadena is a big part of that.
Absolutely. And so I guess almost to bring it back down to the most basic level that anybody that's been in cryptocurrency for even a few weeks will likely understand, what is basically happening here. And please interrupt me, correct me if I'm wrong, but you basically have a fully decentralized, and not just decentralized in a sort of gimmicky way, but a genuinely decentralized L1 that leverages realistically the most secure consensus mechanism in proof of work, but in energy efficient fashion. Therefore, no need for big governments to be stressed out about the resources that are being expunged. But that also scales, I'm cautious of saying infinitely in any context, but it, at least in theory, is able to scale infinitely, provide practically zero level gas fees, and crucially, those gas fees are controllable, predictable, not prone to getting out of hand like a lot of us have been burnt by in, I don't know, I guess years past, but that is also now, or very, very soon to be, completely portable with the biggest developer pool in cryptocurrency. Is that correct? Is that sort of in a nutshell?
Yeah, no, that you nailed it. It's near zero gas fees. I mean, look, you can't say infinite in computers, because nothing's
Yeah.
infinite. AWS isn't infinite. Google isn't infinite, but they're practically infinite. I mean, it's just a question of how much money you want to spend. And in our case, the bill that comes due eventually is the amount of network traffic. If we had 100,000 chains running, we would need to, I mean, we'd be soaking up some pretty fat pipes at that point. But we're very, very, I mean, what's crazy about crypto in general is that crypto market is big. There's a lot going on. It's very exciting. There's a lot of interesting work being done. Lots of assets are changing hands. But from the point of view of data, crypto is nothing. I mean, there's no, the amount of network traffic being taken up by all crypto projects is nothing
Yeah.
compared to, a single AI deployment. So, it's a little bit funny how much, one thing that makes us different is that we've always been looking to the future of professional crypto blockchain platforms. By professional, that means, and that's what's maybe people might not understand about Kadena is that, we have the JP Morgan background. We have a lot of really exciting use cases firing up in the RWA space. There's going to be some great announcements coming with people that we're partnering with to be tokenizing onto our chain. So we're all about the buttoned up, business use cases, but at the same time, it's important to recognize that how important decentralization ultimately is for the future of crypto, and why decentralization is what's actually attracting a lot of these traditional finance people is that that's in traditional finance, they understand that you can't. So just look at something like Solana. Solana looks a lot like Goldman Sachs or something, in the sense that like, if you go onto, if Goldman Sachs rolls out a private blockchain, that's nice, but like maybe it'll give you some use case that, works great. But, most people are probably not going to trust, most banks are probably not going to trust Goldman Sachs, not because they think they're evil, but just because it's Goldman Sachs. They're a competitor.
And
So
crucially, very, very centralized, right?
yeah. I mean, it's even if they had decentralized tech, so decentralization is important from a trust point of view and an
Yeah.
interop point of view. So so keeping decentralization at the core of what we're doing has always been important to us. And then the infinite scalability, and I think we can say infinite just because it's within the same bounds as any other compute. There's nothing in our protocol that puts an upper limit on it. Let's put it that way. And once we get to something like 100 chains, the important thing to realize too is that we're still, kind of in Ethereum block time zone, and we always will in terms of how a single chain works, so that's important for decentralization. But our effective block rate today is 3 seconds. When we launch the 20 chains, it'll go down to 1.5 seconds. And say we double it again, it goes down to 0.75 seconds. It keeps dropping. In other words, the time it takes for a new block to show up on the network keeps dropping. So, when we go to 40 chains, we're already going to be faster than any L2 and than any optimistic L2, which are locked at 2-second blocks. So the parallelized execution is not just important from a gas point of view. It's also important from offering, kind of scaled protocols to users so that, once we get into the kind of future we're looking at now with like intents and brokers and, when something like that, if you have that running on, and we're bringing, one of the great things about EVM is that we have a lot of great partners, lining up to be part of our testnet launch. So, people get it and they understand what we're bringing to the table. But the point being is that, when you get to the point that you have the kind of, when you have chains offering kind of multi-chain performance and you have a mature, kind of intent, broker ecosystem, we're going to start seeing, decentralized, truly decentralized UX on the level of trading systems that you're used to for equities today.
Which is frankly pretty spectacular, to put it bluntly. So here's a question, and maybe it's one that, because I'm conscious that time has just completely zipped by while we've been discussing.
Yeah, gosh, almost 40 minutes.
But yeah, I know, it's crazy.
That's great.
My intuition is that if you had said to Vitalik Buterin in even the early teens, right? If you'd said what is gonna really push Ethereum scalability to the limit, I wouldn't have said NFT trading. I wouldn't have said meme coin trading. I think if you'd asked Anatoly back in 2018, 2019, what is really gonna drive transaction volume on Solana, I think he probably wouldn't have said meme coins and this sort of speculative frenzy. So I guess the reason I say that is because it's so impossible to predict what people will do, but also what people will do with blockchain, right? Especially so. So I guess a big incentive for you guys rolling out the EVM element of Chainweb and so much of whatever else you're doing is going to be ecosystem expansion. It's going to be ecosystem growth. It's going to be encouraging development of genuinely impactful and exciting apps. What does that future look like to you?
I think it's really exciting because one, I think we do have a unique offering in terms of like launching new protocols that take advantage of our. So just to get into the details a tiny bit, one of the things that makes our chain unique is that. So let's talk about KDA, our token. KDA runs on the entire network as a single token, and what does that mean? It means that when KDA moves from one chain to another, it gets burned on the source chain and minted on the target chain. And that means that over the entire network, KDA is never there. You never burn it. You never burn. The only minting that happens with KDA is in mining. And after that, it's one token that operates over all the chains. So it's something that really doesn't exist in other systems, which is a a burn mint parallel token protocol. So that's something that when DeFi really gets their head around that, it's going to be pretty incredible because basically what it offers is the ability to have margin that can be fully booked in the time it takes for a block to propagate in our system, which is under 10 minutes, under 5 minutes in most cases. If it's immediately. Anyways, it can be anywhere from 1 to 6 to 7 minutes for something to fully propagate and achieve at least network finality. And the reason why that's important is it means that you could offer you could be backing somebody. You could have a market maker being willing to back trades on any chain in the system, and they only have to carry that risk for minutes. And so the idea being that you have more scalable leverage, if that makes sense, than you do. In some of these, like if you look at what's happening with intents and all that kind of stuff, it's basically like the winter mutes and the jumps that are backing all this stuff. So it's really kind of a centralized ecosystem. So even there, like when we start working with these really smart teams that are coming both in Pact and in EVM, it's figuring out how we can have kind of more sustainable leverage, if that makes sense. Which is kind of a weird concept even in equities because everyone loves leverage. But so that's one thing. And then the other thing is that RWA and institutional use cases are really important too, because we're in a rare situation where business is, especially like TradFi and kind of big banks and people like that, they're actually leaning into this because out of a belief in what the future holds for finance. And they really see that the future is going to be on chain, and they really see the advantage. They know better than anybody how important decentralization is going to be for this because banks don't trust each other. They're only going to, and so some of the places where that's happening now is kind of in wealth management where, there's a lot of people who have a lot of money on chain. They've made all their money on chain, and they don't really want to go off chain. They don't want to have to take all of their money off chain and put it in Fidelity or something like that and trade around. They want to be able to natively work inside of a public chain environment. So there's a huge addressable market, and that's something that a lot of the tokenization is looking towards in terms of the reason why I say this is that it's not something that's necessarily going to print money for them in the near term, but they see that the market is, that this is a market that will develop over the next few years. And it's a combination of those things. It's a combination of bringing real scalability, DeFi, and then giving a truly decentralized and proof of work backed environment so that some of these real world use cases can really find a home. That's what Kadena is about.
I mean, that's brilliant. And I think it does make a lot of sense. It makes a lot of sense, I think, in particular from a developer standpoint, right? Especially a developer that has an understanding of, call them the weaknesses of traditional finance, right? So another question I had, and I think this is something that was mentioned to me, is that, you guys are taking pretty active steps to encourage development. And I think one of those elements is, I think, a pretty special grants program amongst the sort of grants programs that exist in the space today. Is that something that you'll be able to speak about, or is that one for a later date?
No. We announced it at East Denver. We have 25 million available immediately for EVM projects to launch on our chain. We have if you check out our token economics, we're one of the fairest token distributions out there in terms of platform versus versus stuff that's been distributed to miners and users. But the other thing is that means that there's still money coming out of the network that we put directly towards developing new products and giving to builders to build exciting new protocols on chain. So right now we're gearing up for Testnet this summer. So it's a great time to get in touch. It's a great time to get in touch with the BD team and learn about what we're looking for in terms of ecosystem participants. But it's certainly not all sewn up yet. So that's but same with the pack side. On the pack side, we're innovating in this multi-chain protocols I'm talking about. We have a lot of exciting things coming live in the upcoming months on the pack side, including finally launching our Hyperlane bridge. We even have a ZK decentralized bridge coming in the summer, plus CDP protocol, plus some exciting developments in swaps and perp dexes. So there's really a ton to do and a ton that needs to be built on the Kadena ecosystem. So builders who want to challenge and want to be part of the future and also want to be part of a great low gas ecosystem, you need to come check out Kadena.
Absolutely. And I guess for context, obviously, I'm not a developer. I work very much on, I guess, the other side of the technology, right, in terms of discussion and research and growth and this kind of stuff. But I have already been in communication with I guess you'd call them the ecosystem growth or the marketing or business development side of the Kadena ecosystem. And honestly, having spoken to so many different L1s and L2s over the years, I think they are a team that is genuinely in it to help the developer, which I think is, without naming names or anything like that, is not necessarily something that is true across the entire space. So I really would encourage, if anybody is interested in getting involved in the ecosystem from a developer standpoint, or frankly, just from I want to find out more about this standpoint, then I really, really would advise getting in touch. And Stuart, what's the best way to do that in terms of getting in touch? Is it as simple as a Twitter DM? Is it joining servers? Like what would be your advice there?
All the above. We have a Telegram chat that's very active. We have a Discord group. Of course, we're here on X, so anybody who wants to tweet at us. Many of the people, many of the team members are on this call right now, and we'll be sharing also our landing page for specifically EVM. Has a bunch of helpful links there, including some stuff to read about what we're doing with Chainweb EVM. Twitter DMs are good, but yeah, we're there on Telegram. So we're all the usual ways.
That makes an awful lot of sense. And I guess before I just give you a few minutes at the end to sort of take the floor, share anything you'd like to, a couple of things that I'd like to touch on. So almost to go back to what we were speaking about before, but almost questions that have come to me and I think would be pretty important is, EVM is the obvious candidate, right, to attack for any L1 network in terms of developer pool, in terms of establishment, in terms of, the value of that portability. It makes a lot of sense, but I get the impression that, Kadena's outlook is going to be practical. it's going to adapt to changing circumstances. Does, for instance, Chainweb EVM open up the door in the future to Chainweb SVM or whatever environment it is that that might be crucial?
Yeah, I mean, SVM is an interesting case. I think there are some kind of noises in the Solana community about wanting to have a more EVM compatible layer. So I think that's one that, yeah, if SVM kind of emerges as an actual standard, then that's something we could certainly consider. Another one is RISC-V. Or RISC-V.
Very, very topical at the moment, right? Yeah.
Yeah, I mean that's something honestly that we've talked about for a while because as we roll out the low level requirements for the CK bridge that's coming in the summer, that's any of the proofs that get validated, we're using the same protocol as Succinct Labs, so SP1 and Plonky2 verification on chain. The things that you're proving happen in a RISC-V environment already. So, so I think that's the big question mark with RISC-V is whether or not actually application development happens in that environment. Like happens in SVM or EVM or Pact today.
Yeah.
Or if it's really something that is, targeting kind of a proof environment, in which case we already have the industry standard solution coming on chain in summer. And, I think there's still a lot, Vitalik is, as always, pushing new ideas forward, because he loves to give the Ethereum Foundation tons to chew on, I guess. So I don't think RISC-V is mature enough to be considered as a proper application layer. I just don't think it has advantages, especially when you consider that smart contracts are, we understand smart contracts well. We have our own smart contract language. It's similar to EVM in the sense that it needs gas to operate. That's a fundamental fact of smart contracts, is that you need to have gas as a fairness mechanism, and that's a significant detail if you're going to start executing things in RISC-V or something like that. So there's all these. They seem like small things, but they're actually big things that need to get teased out. At one point we were considering having a WASM executable so that we could just have native Rust running. But EVM is, as you said, we're practical. The first thing we want to do is make sure that builders have a place to go using technologies they understand to leverage a scalable, decentralized system to build the apps they want to build. When RISC-V is something that they're demanding, then good news, we can always launch chains that run RISC-V natively. So we do enjoy a very good architecture that allows us to launch any application layer that makes sense. And today that's Pact and EVM.
Again, that makes a lot of sense, and I think it's quite hard to argue against the fact that the approach that you're taking is it does make a lot of sense. I think that's pretty hard to argue against. And also one thing I would mention is I think you mentioned that EVM testnet is really looking like as soon as summer 2025. What I would say there is even though I'm not a developer, I've met and worked with enough blockchain developers, rather than call them application developers, to understand the implications and the time frames that sometimes this can take, and that is an impressive sort of roadmap milestone to be aiming for. I guess before I just sort of let you take the floor and discuss anything you'd like to before we end, is there anything else you can share about that testnet phase in terms of, I guess when it's coming is maybe a hard question to ask, but what it's going to be like, what the plans are for it to make it unique to Kadena, if that makes sense.
Yeah, I mean, the main thing we're focusing on, I mean, the architecturally, it's already, understood what we're building, which is our same multi-chain protocol, but now available to EVM. And that's really not a very different environment than developers are already used to. It basically has some special precompiles, and we have code available to make any ERC20 natively multi-chain. So that part is there's not a big lift involved but you don't even have to go multi-chain if you want to start, working with Kadena, because right off the bat, there's multiple chains to work with. So, Merely by achieving a nice distribution of apps across the chains, we can keep gas under control for the near future. So testnet is definitely summer. I don't have a specific date, but it's not late summer. Let's put it that way. We're targeting an early summer release. Let's just say we'd like to have some big news at ECC. That's what we're shooting for.
Got it. And rest assured that when that does happen, BSCN will be covering it in full form. So keep an eye.
Yeah. So it's going to be multiple EVM chains in testnet, and it's going to. The other thing is that we're looking to incorporate Pectra. So we expect that to be available so that's going to be interesting because Pectra is fully backwards compatible. So it's not something you have to engage with, but really, I mean, this is something that developers should be looking at because the benefits for UX are going to be tremendous in terms of chain abstraction, gas stations, all this kind of stuff. So, a lot of what we're working on is the partner mix in terms of making it that all the kinds of services and on-chain infrastructure that, people expect in a modern EVM environment are there. So that's our goal for testnet. And then from there, we're going to march as aggressively into production as we can. One of the things we are very interested in working on is with partners is the best way to start offering a truly multi-chain protocol to users so that they can start taking advantage of that 1.5 second effective block rate, things like that. So the amount of kind of innovation and just sheer buildness that's going to happen in Kadena over the rest of 2025 is really going to be incredible, and I'm super excited about it.
I love that phrase, the sheer buildness. I think that's such a good phrase to end on for sure. And yeah, I mean, from what I've heard directly from the Kadena team and what I've heard just from frankly reading what is out there in the public domain, it is going to be a really, really exciting few months for Kadena, and I know that we'll be watching it very closely. Before I let you go, Stuart, is there anything else that you would like to share? Stuff that I haven't asked, stuff that I haven't touched on, anything that you think people are going to find worthwhile?
We covered most of it. EVM is what we're focused on a lot. There's always interesting stuff going on in Pact, because again, that's where, one of the interesting things is going to be that once people are on our network with their EVM solutions, you don't have to just use Gnosis Safe if you want to do multi-sig, for instance. You can you can bridge assets over to Pact, and you can use Pact as a multi-sig environment so there's a lot of, so one of the things that we're really targeting by end of year is having the ecosystem infrastructure in Pact to be ready for people, in terms of, again, that's where a lot of stuff like perp DEX, a new DEX, CDP protocols, stablecoins, a lot of that stuff is launching this year on the Pact side. So so we're not staying still on the Pact side. That's where a lot of our innovation, that's where a lot of next gen protocols, that's where we worked out our parallel chain protocol in the first place. So it's the kind of thing that, and it's just a really fun environment to work in for block. It's refreshing if you've worked in EVM. EVM is obviously a great place to build apps that people will actually use, and it's got incredible tooling, but it's a very frustrating environment in a lot of ways too. So, when you really run into that wall of something that's hard to build in EVM, the good news is that you will have this other environment that you can interop with for instance, we have multi-sig with WebAuthn passkeys. That's our Spire key product, so that you can be signing with your phone natively. Right now you do that in EVM and it actually takes like 10 minutes for that to go through, or longer. It takes like an hour or something for that stuff to go through. Of course, Pectra is going to be a huge improvement for that. But this is the kind of thing where, kind of cutting edge tech is going to be being developed on both sides of the application ecosystem in Kadena. So, it's a really exciting time to be a builder.
Again, yeah. And that optionality, it is genuinely exciting, even as someone that is not a builder. I can understand sort of the appeal there and what that could mean over the not actually that long term. But honestly, Stuart, it has been absolutely fantastic to have you on. It's been a real privilege to host you. The background, the caliber, and frankly, the level of detail that you've managed to go into while still keeping some of the technical stuff accessible. It just makes us all the more excited for what's going to come ahead. And I really hope you'll come back on and join us. Maybe, maybe there'll be some milestones to be discussing next time. Who's to say? But it's been absolutely brilliant. And huge thanks for your time, and enormous thanks to the entire audience for joining. The attendance has been great, and I think that's a reflection.
Great. Yeah, it's been great to chat. Great questions. And yeah, it's really great to be, on BSCN. And yeah, we'll definitely be back.
Fantastic. In which case, enjoy the rest of your day. I think it's earlier on your side than it is on mine. So thank you for joining. And I'm sure we'll speak again soon.
Great. Thanks so much.
Thank you to everyone that joined, and have a great one.